Prateek Agrawal now joining us from Motilal Oswal Asset Management. Prateek, morning. Good to see you. Prateek, just want to start off on the macro note because it's an important policy meet today. And though one would have thought that our RBI governor is more watchful and very conservative, but what has transpired in the last 48 hours, the US, the recession fears which have emerged, what's happening in Middle East on the geopolitical front, or even Japan for that matter. Do you think that today's commentary would take into account these things and flag off some change in stance? Because if you remember, there were back-to-back growth upgrades in India. If indeed there is a shadow on global growth, will it not, cast an impact here?
No. So, in the commentary, my sense is everything will be taken into account because that is the job of the central bank. If anything will be done, probably not, because all said and done, our economy is in a fine fettle. Risk to growth for global growth slowdown would at best be very marginal because if you look at our economy's export intensity, it is just about 18% of GDP. So even if the global growth slows by 1%, the impact on our growth is 0.18%. And on the flip side is the savings one makes on lower oil prices. So since the whole issue started, oil which was 85, 86 is 77, 78. $7 cheaper is $10 billion saved for the country. So it kind of balances. So I think there is no this thing on growth outlook of the country. And so, the central bank will note everything that is happening around us, including what is happening in the neighborhood, which can cause some stress on our country financials as well if we get a large surge of people wanting to come over. But I don't think do anything. It is all good as of now. Forex reserves are high, economy is doing well, so nothing to be done. While everything will be noted.
So what has been your strategy then of late, and especially since the meltdown in the global market since Monday? Any portfolio rejig, any allocation changes, or anything specifically that you're keeping on your radar?
See, I'll tell you, global meltdowns should not impact us. We are similarly sized to a Japan, to a Britain, to a Germany in terms of economic size. Now, suppose India falls, do these market fall? We are similar in size and we are growing, yet when we fall, these markets don't fall. So just because they fall, why should we get so worried? Yes, there is some amount of their money into our markets, that I understand, and the turmoil may result in some amount going out. But unless that amount which is getting sold on a daily basis, crosses, let's say, a ballpark number of 5,000-6,000 crores a day, I think our markets would be fine. The other point that you say is change in stance. So just look at it. A trend, once it starts, goes on for a long while. So 2000 to 2008 was a period when capex intensity of the economy moved up. 8 to 21 was a period when consumption intensity was higher. It gained market share. And over the last 3 years, you have again seen capex move up. Now, these things continue for a while, so we do believe another 4 or 5 years would remain a period when capex intensity is higher. It is in line with the policy stance of the day. So every dip we think is a great opportunity to bump up spaces that we have been positive on.
Okay, give us a sense then, Prateek, morning, as to what the outlook is when it comes to the pressure, the downward pressure on crude oil that could take place, and what that could potentially mean post the US election results on manufacturing margins of individual companies and for the India story as a whole?
No, India story, great chance that it gets better. The turmoil in the neighborhood means certain spaces do better. That's a very cheap in the labor cost kind of an economy. We are a tad more expensive. People used to go there for their cheapness. Now maybe more people look at this country. US elections, either it will be ceteris paribus or better in terms of China plus one sentiment, which again gives us policy room to protect Indian industry, make Indian market available for Indian industry, which again should be good. Yes, there is a chance that in the space of semiconductors, US may just look the other way because China, Taiwan are strong in that field and they need it. And some deals may happen, but broader spectrum, I think the thoughts remain. People want to disengage. People want to make themselves more resilient, more self-reliant. And it is a learning from the COVID as well. You can't put all eggs in one basket. So I think if the trends continue, it stays good for India. Now, a regime change, if it spurs oil production in the US, and the green lobby goes back a bit, would be negative oil prices, and negative oil prices as such is good for India. India, one should expect Indian price earnings to expand if oil prices decline. We are the largest importer of oil amongst the larger economies. Now, there is a small flip side. One has to see what kind of discounts are still available for Russian oil. So while the price of oil may fall, the discount available may also fall. So which may have a negative margin implication on our industry, because products are priced on import parity rather than there may be just some amount of margin pressure if the discounts go down from Russia.
Right. Prateek, let's
But
come back
otherwise,
to
all
India and talk about, a section of the market has been just started off to do well after 2-3 years gap, the lower end of the K. If you look at the numbers of, say, value retailers, V-Mart, etc., or commentary, I mean, just an hour back, even Sulla Vineyard, which is usually seen as a luxury play, is telling us that the cheaper wines are selling higher now. This part of the consumption basket hasn't done much. Is it time to take a look there on valuation or some rebound in the value side, the lower end of the K, as they say?
Yeah, no, so people get slotted as value or otherwise, but they may have changed the merchandise to suit the time. Understand who we are. We are sustainable growth investors. We try and find spaces in the economy where growth can sustain at meaningfully higher than the averages over long periods of time. And there, in terms of the thought process, it is the higher end where we believe higher growth can sustain for a very long period of time. So, this value stuff, if it is resulting in a lot of move from unorganized to organized, may help. But as such, ceteris paribus, we don't expect the value part of the market to do well for long because or let me say, do well versus the guys selling premium stuff. Because as India gains in per capita, we are an aspirational society. Idea would be that people try and upgrade. So the upgraded part should see higher growth. Yes, somebody who is in the value part can change merchandise and still do very well. So that remains to be seen. But we are not for value. I think roti kapda makan kind of stuff is completed for India. Whatever is left will be done over the next 2-3 years. So if you see volume growth in the base categories, they are tending towards zero very quickly. Premiumization is the story.
And that really brings me, Prateek, to the kind of new paper which has been hitting the market of late. And that clearly shows you sort of the next gen, right? Be it Ola, be it First Cry, so platform, renewable energy, new energy, all those kind of themes now coming out, and most of these companies listing as well. Having said that, anything thematically that you're looking at from this new set of IPOs which have come by?
No, so we do invest in IPOs and we love a lot of these newer generation guys who are coming in. Not to say that we invest there, but the simple reason that, in one or two meetings, it's very difficult to assess how good a business is, how good the valuation is. We do go in sometimes, but most of the times you would want to see the thing list and see how the experience is after listing for a period of time. That said, you hit the nail. This is how we think. If you see over the past 4 or 5 years, there have been many new businesses. So just like India got IT in 93, 94, India got real estate as an industry listed in the markets in 96. 2006. In the similar manner, you got electric vehicles, you got electronic manufacturing, you got new tech, defense, and so on as an industry where investments are possible in a meaningful manner over the past 4 or 5 years. These are spaces which are new. The quantum of growth is large. The longevity of growth should also be very good. And we have sizable exposures in these spaces.
Right. All right, Prateek, we'll let you go on that one. Thanks so much for joining us on the show today. That was Prateek Agrawal of Motilal AMC. But let's move on and